Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Monday, everybody. Hope everyone had a great weekend and is ready to kick off what should be a very interesting week. This week is interesting because we are actually beginning our earnings season with the financials on Wednesday. So that kind of kicks off this week with impacts clearly on the S&P. If you haven't checked that out or aren't aware of the ways in which earnings impact futures traders, check out some of the free videos from last week over at the Simpler Trading YouTube channel. I did a number of them because I think a lot of times, of course, equity and ETF traders are aware of the impact of earnings, but a lot of times futures traders tend to overlook it. So check that out and be sure you're spending some time every morning, preferably at the beginning of the week, over at the whatever calendar you like. I like Forex Factory because it's a global calendar and I'm aware of all the different hot zones that I'm going to be dealing with. If it's out of Canada, because I'm looking at the Canadian dollar, terrific. If it's something in the Asian session, if I'm trading futures in the Asian session, again, I'm going to be aware of that. The NAB business confidence, it's going to affect the Aussie, but trade balance numbers out of China, again, potentially impactful for that Asian session trading. So just keep aware of the CPI numbers. I mean, that's a big number when you're thinking about macroeconomic analysis. Again, 4 pillars of macro, that is one of them. All right, so again, be aware of that. And the other calendar that's going to be especially important this time of year is the Estimize calendar, where I pre-follow. So what that means is I head on over to estimize.com and I have a free account. This is a service that, yes, there's a premium, but the free one is terrific. And I think for most folks, it's going to be perfectly fine. And so if you take a look at following the individual symbols that you want to be aware of, look, remember, and I know a lot of you already know this because we've talked about this for years through every single earnings season, you want to start the scan for double green trending markets 6 weeks out. Right? 4 weeks, I'm hoping that we're going to start to see those pullbacks. And between 2 and 4 weeks, we know that's that sweet spot for pullback buys within double green markets. And so 642 earnings, we are right back in that season. But remember, I don't care about the earnings coming up now, right? I'm thinking a month out. I'm thinking 6 weeks out. So this is a really good way to remember that, frankly, the next batch of earnings plays for me are really towards the end of this month, inside that 4 to 2 week window. But ideally, I'm going to be looking at names about 5-6 weeks out, looking for those double green markets. All right. So with all that being said, the importance of the calendar twofold kicking off this week with not only the data that we deal with, but also the earnings. And let's get to it. Oh, one other thing before I get too ahead of myself, and that is, let's see. Bear with me one moment here. I'm actually checking my Slack right now just to make sure we've coordinated this. Yeah, we are going to be streaming the morning today. Yeah, so just keep that in mind. If you haven't already, check out the either Facebook page for Simpler, YouTube for Simpler, or even my personal YouTube, and you'll find that this morning's day trading is going to be streaming. All right. All right. So I just want to make sure that everyone is aware of that. So you can check that out. It's just a separate stream. It won't be connected to this one. So if you want to see the way in which I day trade in the morning and kind of hang out with us until 11:30, feel free to jump in and catch that live stream. We do it every other Monday. And I do it every other Monday. And so you can catch this week and then week after next. All right. So let's get to some questions, shall we? Thanks as always. A little housekeeping as we kick off the week. So any thoughts on the Dow? All right, let's go check on the all right, any thoughts on the Dow? Yeah, I mean, what I would feel about the Dow, DOW, when I say the Dow, I mean, sorry, stock. And we can take a look at YM as well. So what are my thoughts on DOW? And hey there, PG. So yes, I mean, I like the overall trend, right? So you have the Dow itself, that's the upper row in here. That's heading higher. What I'll typically do on the second row is put in the ETF or the index that this particular stock would be most heavily weighted in. That keeps us focused on the relative outperformance of the stock in relation to the ETF. So ultimately, what we want to remember is if it's a double green and the overall sector is a double green too, you have excellent alignment. And we want to look for a continuation here. So yes, I would most definitely look at a continuation. Now, we took a look at DOW. Let's take a look at the DIA, Dow Industrial Average. Continues to be, as far as I'm concerned, this has been the relative outperformer for a while now. This is the market that has the clearest uptrend. It's the least, relatively speaking, affected by tech. And so we continue to see a lot of bullishness here. And I want to continue to focus on pullbacks, not only in the Dow, but in the industrials and the transports and in the individual stocks that are weighted within those. So let's look at them from an ETF perspective. So DIA stocks, IYT stocks, XLI stocks. So looking really good there. All right. Prabish, good morning. Happy Monday. What do I think of XLE? I'm very optimistic about crude. Well, stocks. So I want crude to head up higher first. I mean, that would be great. But I am very optimistic about the XLE. And then the XLE is really a conversation about XOM and CVX primarily. It's really a conversation about those two stocks. And so if you're looking at the XLE, let's jump on over here real quick. If I'm looking at XLE and looking at holdings, you'll notice, just as you mentioned, EOG, OKE. OKE is weighted further down the list, as is KMI, although I do like Kinder Morgan. EOG is number 3 in weighting after Exxon and Chevron. So yes, if XLE heads higher, and I do have a long bet on XLE, then it should take all the individual boats, especially the heavily weighted ones, higher as that XLE, that ETF moves higher. And by the way, how influential is the XLE on the overall market? Well, look no further than the volume. We see an XLE, so really good stuff there. Yeah, I am quite optimistic. I think it's going to require. I mean, clearly we're going into earnings, so a little bit of the commodity influence on those stocks might be a little bit lower. But having said that, remember that as crude moves higher, this should help oil stocks also move higher. So awesome. Ravi asked about CAT. You got it. So CAT's part of that XLI conversation. And for those of you that are wondering, all right, Rog, how do I know what part of the conversation it's, they're doing maintenance? Bummer. So what you want to always remember are the heavily weighted names within the broader averages. So let's say I bring up, let's do this. Let me bring up the multi-chart for XLI or even the DIA. I like these sectors. They're tethered to the Dow. I still believe that these are going to be sectors that are going to benefit disproportionately from the reflation environment. And take a look at CAT there. So when you've got a double green sector, this is the XLI, remember, and double green stocks, there's not a lot to not like in this, but CAT would definitely be one of them. All right, moving on then to, let's see. Tesla, sure. Let's jump on over to Tesla. And here we go. All right, so if I'm taking a look at Tesla here, and I've got my eye on really what is still chop. Now, what would I call this chop? I would call this chop let me log back into put that off for a moment. What would I call this chop? Take a look. Again, you have 2 rows here. This is the row, the top row, that tells me what's going on with Tesla. The bottom row right now is on the SPY. The SPY is outperforming. Remember, Tesla's part of the S&P now. It's part of the NASDAQ too. That preceded the addition to the S&P. And so if Tesla's lagging, it doesn't mean that it can't be a market that could reverse and move higher. But it's not a relative outperformer. It's not really in tandem with the broader average. So that should be sort of a warning. Relative outperformer, not at all. But could it play catch up? That's another conversation altogether. And if it's going to play catch up, I'd like to see it break above 717.85. Let's just call it 718. I'd like to see a move through 718. We've been as high as 708 and change. So I really want to see what this would actually amount to becoming a bottoming pattern called a Dow 1, 2, 3, 1, 2, and we're looking for that move through back in here. This is our swing high. So we're actually looking for that move through the swing high, and we're also going to break the wave, which I love, and we're also going to actually break a volume ledge, which I love as well. So a lot's going on right where we are so compressed. Blue grab candles. We'd like to get above this point of control. That's that solid white line showing us where the most volume has occurred based on a certain amount of look back into the calendar. A lot to like here. Ultimately, what I'd like to say is that of all the things to focus on, this wouldn't be near the top of my list, but I do think it's probably poised for a breakout. And it's this 1, 2, 3 wave reversal bottoming pattern that I really like the look of. All right, so thank you for the question. Next up is futures market. Thanks for the futures question. Hey there, Rocky. Corn and beans. Sure. So we can take a look at corn. We'll start off with that ZC contract. And do I like corn? Look, ever since we had that report, we had the crop report that came out, corn definitely sort of got, it's been stuck in the mud for a bit, for a good month almost. And it finally started moving higher. Again, this is a reflation trade. This is an overall uptrend. So even when an uptrend loses some of its clarity, as we've seen through here, and even through here, look, the worst thing we can do is assume that a broken uptrend is a downtrend. What we want to do is focus on the trend that was, right, which was up, and then assume that the path of least resistance is still going to be up. That's where a lot of traders get into a lot of trouble. They get very aggressively reversal focused. Broken uptrend, let's get short. No, normally that broken uptrend is going to create a retracement, and that retracement's really not a retracement anymore. It's a chop. So you're focusing on oversold buys. You're looking at a slow stochastic. You're looking at a ready aim fire for that opportunity. All right. So let's see here. Next up is, and you asked about beans. Beans, by the way, beans, I'm actually looking at bean oil a little bit more, Rocky. I'm looking at that bean oil just a little bit more than I would the bean market right now. I think bean oil has a slightly better organized uptrend. All right, how does the daily chart of Yeti look? I love the breakout. Okay, so let's take a look at Yeti. Sure. So trend, no. Chop, yes. So we know that back through here, we had a nice trend, double green, right? Now you can see how long we've been moving sideways. This is a choppy market. It's really no longer a trend any longer. And within the context of chop, so let's just extend from here how long this market has been chopping. So there's your range. That is not a trend, and it's definitely not a place that I want to be long at the top of the trend. Now, if you like a choppy market, ready aim fire is what you really want to focus on. ready aim fire within the context of a wide-ranging chop and focusing on the lower end of the range for buys, not at the top of the range. This might keep going. That's absolutely true. But there is better timing, and that timing isn't going to be a momentum-based setup within the context of chop. Now, a momentum-based setup within the context of consolidation in a narrow channel versus chop, is better, and you're going to find, and I noticed you asked about the squeeze. So again, I only use the squeeze when the markets are consolidating. That's simple. I only use the squeeze. You know what? I'll show you a great example. This was a huge trade for John last week. That is consolidation. Blue grab candles, narrow range, but still very much, we're still bullish. Green, 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 yellow. Yellow chop versus yellow consolidation. You can see that really easily there, just in the price movement range. This is what you want to focus your squeezes on, not on wide chop. Now, you can use whatever kind of filter you want, but my sort of hit percentage on squeezes are higher because I'm much more discerning about when I will actually consider that setup an indicator. And for me, the squeeze name, the title of the indicator, says it all. What are we looking for? We're literally looking for price action to be compressed. And this kind of situation, that's what you're looking for. And I would not say that, kind of going back to the earlier question, I would not say Yeti is doing the same thing. I hope that makes sense. And thanks for the question, Matthew. You have 3:30 Amazon calls, sure, for this week. Do I think we'll see higher prices this week? I wouldn't bet on lower. But here's the thing. So once again, this is a choppy market. This is still chop. All right. And it's finally broken out of chop. And this is more along the lines of that 1, 2, 3 that we were talking about earlier. So when you're looking at a market that's been lagging and you're looking for finally the market to break. All right. I'm just following the zigzag. And that's really more of a Gartley conversation here, but I won't get all techno geek here on it. But nonetheless, what we're looking for is a swing high break, which we got. And that's where this whole party gets started. Okay, cool. Would I assume it's suddenly going to stop? I wouldn't, but I've got to also be aware that we're getting up towards previous swing highs. This is still a choppy market that it's had a breakout. So look at the ready aim fire, look at a slow stochastic, find out if we're nearing a zone where we might see some selling pressure come in, which case we might simply pull back. So I never try to assume we're going to see higher highs. I don't want to predict where the markets are going. That's for folks on TV. But what I will say is I sure don't want to be short. So if there's a path of least resistance, I definitely think it's higher. But what we'll do incrementally every single day, I think from here on out, is going to be largely relying on previous swing highs, whether or not there's size waiting there. And right now, I have to tell you, there's not a lot of size waiting there at all. So is there a little bit more opportunity to continue higher? I would think so. 34.25 is the first time we actually see a little bit of a volume ledge there. Not much. Okay. All right. So then moving on to our next, and yes, by the way, if you want to join us in the futures room, which I'm going to be segueing to here in just a moment, we're going to do a live stream of the futures morning session from 9:20 to 11:30 here this morning. So all you need to do is go back on over to Facebook or whatever YouTube channel you're on and take a look at a separate live stream that's going to begin here in about 60 seconds for our morning live stream. So you can definitely check that out. And then later on today, those of you that are interested in the way that I trade a lot of these stocks and options, we have our Sector Secrets weekly Q&A kicking off at 3 p.m. today. So whichever way or whichever asset class is appealing to you, definitely check out those two, as well as many of the other services we have here at Simpler. All right, so let's see. What am I watching in the FX markets? Yeah, let's kind of wrap up today's session with that, and then I'll talk about some currencies when we do the morning, probably later towards the morning. But I've been focusing mostly on long Aussie, short yen, short Swiss, long Canadian dollar. right? And I've been leaving the US dollar alone and the euro alone for the most part, because if we have true risk appetite in a reflationary environment, long Canadian dollar, long Australian dollar should outperform. And then if we have strong equities, as we do, not just in the US, but globally, weak yen and weak franc should continue to be the trend. And I'm just looking at ways to pair those up with that commodity, it could be commodity futures, but with that currency contrast. All right. Okay, gang, thanks as always for joining us for Charts and Coffee. Again, if you got more time, log on into our next session. You'll see the separate link for that live stream on Facebook and on YouTube. All right, gang. If not, I'll see you tomorrow, same time, same station. Be good to each other.